From the floor of the CME Group, this is Danny Riley on this January 4th, 2010, the first trading day of the year. We've got the S&Ps up 18 handles. Mutual Fund Monday has been kicking ass like nobody's brother. I believe it's been up 11 out of the last 14 occasions, with the negative handles being around 15.5 and the positive handles being around 120. So obviously there's been a very, very big tilt toward buying on Fridays, or as it be Thursday of last week, and holding those futures contracts into Monday. That has a lot to do with the way the mutual funds and accumulate money going into a weekend, but I think this is a little bit larger than that. It's a new year, and these mutual funds and pension funds that did not catch on to the stock market last year, or that caught it late in the year, are adding, and they're adding big time today. They've got the Dow. We've got the Dow up over 150, the SPU's up almost 18. The rest of the floor is a little benign compared to what we're seeing here, but we'll go over some of this stuff. Earlier in the, well, I was going to call this markup city because that's really what it was. Before we opened up today, they had everything up across the board. The commodities, all the financial futures, and specifically the index markets. Before the open, the beads were up 20, and now they're unchanged. The currencies, over in the currencies, the euro dollar, the EC currency is up about 115. Crude's up $2. The 10-year options has volume of about 50,000, and the euro dollar options have about 151,000. Bottom line here is that there's nothing to prevent this. Not everybody's back to work yet, and statistically the first couple of days of January are very, very strong days for the stock market. What happens after that, we're not quite sure, but we do think that we're going to get into these levels that we've been talking about for the last several months, which is 1130 to 1133. I'm sorry, yeah, 1130 to 1133 is a big area on the upside here. We've got to get above that and close above that to go up a little further from there. Our next level is the 1150 level, and then 1180, 1185. We do think these are possible upside objectives. We don't know why the market would turn around so early in the year, but there are a lot of people that think that going in, either into the second week of January or even out to March 9th, where we made our low last year at the 666 level, that possibly around that time we could start to see some selling. But you know what? The way this market's set up right now, the money trade is still on the long side. It's buying weakness. It's not trying to short this stuff. I think when the market does turn around, when we think when the market does turn around, that there'll be all sorts of opportunities on the sell side. But right now, you know what? It's just like wasting good bullets. What happens again is these guys in here, the retail and the local guys, they come in, the market's up, they're looking for a trade, automatically they sell. They put in buy stops above the market. When the markets are holding premium, those buy stops elect the buy programs, and up we go. So that's where we're at here. We're going to do a little further on this. We've got about 5,000 big S&Ps traded. That's kind of normalish for what we've been seeing. We expect that to pick up over the next couple of weeks. And we've got about 760,000 minis traded, with 150,000 of that done in Globex overnight. The way we see it, there's no fighting City Hall. We're not here to do that. Remember, the trend is your friend. That's it from Top Step for the day.